$1.48 billion in quarterly revenue, $1 billion in adjusted EBITDA, $576 million in net income, and $826 million in free cash flow in just 3 months. A 250% plus stock rally in under a year from $100 to $350, and a $1.2 billion share buyback executed with precision. Now, these are numbers of a company that sells GPUs like Nvidia. These are the financials of a company once seen as a mid-tier Adtech player, a footnote in the mobile gaming supply chain. But this firm rewrote its history quietly, aggressively, and profitably. While the market was distracted, it engineered one of the greatest financial pivots in recent memory, transforming from a low-margin app ecosystem into a cash-generating ad tech machine with software-like margins. In an era where growth is often fueled by hype, this company let the numbers do the talking. Every quarter, every balance sheet, and every buyback, Wall Street is just beginning to wake up to what's happening here. The company, AppLovin. Have you ever opened a game or a random app and seen an ad so perfect that it felt like your phone read your mind? You were thinking about ordering a pizza and suddenly there's Domino's. You just talked about Bali with a friend and now a flight deal shows up mid-level in Candy Crush. It's not a coincidence and it's definitely not magic. It's AppLovin, the invisible puppet master behind the ads inside thousands of your favorite apps. A few years ago, hardly anyone outside the mobile world knew about them. They were just another software company helping game developers make a little ad money. But today, AppLovin is a $150 billion AI-powered beast, processing millions of real-time auctions every second and generating profits that make Silicon Valley jealous, with a stock that has gone from $100 to $350 plus, and analysts see more upside. So how did this quiet background player go from a developer toolkit to the undisputed king of mobile advertising? In this video, we'll break down the 3-step master plan that turned AppLovin into one of the most unstoppable, profitable forces in tech, and why your screen might never escape it. Stage 1. From game SDK to profit pivot. Let's rewind the clock to 2012. The mobile boom was basically exploding. Angry Birds was at its peak, Flappy Bird was frustrating everyone, Candy Crush was eating hours of people's lives. Mobile games weren't just fun, they were gold mines. But there was one big problem. Developers didn't know how to make money. Most weren't charging upfront, in-app purchases were tricky to implement, and ads, they were annoying, clunky, and barely paid anything. Enter AppLovin, a tiny startup with a boring name and a brilliant idea. It asked, what if we become the engine that powers all of them? So they created a lightweight SDK, a software development kit that the developers could drop into their apps. Just a few lines of code and suddenly ads would start showing up inside the game. AppLovin would automatically optimize which ads to show when and where. Developers, they would just sit back and watch the revenue flow. No ad sales teams, no complex integrations, just plug, play, and profit. It worked because AppLovin understood one thing better than anyone. They realized that mobile attention is actually fragmented. Users spend minutes inside apps, so to monetize that behavior, they needed lightning fast, hyper-targeted, and in-game ad placements that didn't feel disruptive, and they nailed it. By 2015, AppLovin had quietly become a must-have tool for mobile game studios. Big names like Machine Zone, Game of War, Outfit 7, and dozens of others started using AppLovin's SDK. They weren't flashy, they weren't public, but behind the scenes, they were raking it in. In 2015, AppLovin was generating over $200 million in revenue. In 2016, they hit $500 million, all without ever raising a single dollar of VC money. AppLovin was profitable almost from day one, and that was unheard in Silicon Valley. In fact, there's a famous story. When they tried raising money in the early days, VC said no thanks because ad tech was boring. So instead of diluting their ownership, AppLovin just focused on making money. By 2017, AppLovin had turned into a cash printing machine, quietly powering ads across hundreds and millions of devices every single day. But that is not where it stops. By 2018, AppLovin wasn't just helping developers monetize, they wanted a bigger slice of the pie. They thought, why just sell the shovels in the gold rush when we can start mining some gold ourselves? So they started buying and launching their own mobile game studios. Instead of just placing ads in other people's games, they began building and acquiring their own hit titles. Now think about this. AppLovin was running the ad platform and making the games. They could use their ad tech to juice installs, optimize monetization, and generate outsized profits on both ends. And this is where the entire flywheel kicked in. Simple but deadly. Launch or acquire a game, use AppLovin's ad platform to aggressively promote it, pull in tons of users cheaply using data from across the ad network, show them optimized ads, reinvest the profit into launching more games. It's the same model Facebook has used for years, owning both distribution and monetization. By 2020, they weren't just an ad network anymore. They were AI-driven mobile entertainment empire. What started as a plug-and-play monetization SDK had now become a platform for mobile advertising, a portfolio of game studios, studios, a mountain of first-party data, and an automated engine to scale hits and cash in on them. In a world where Apple's privacy updates were kneecapping Facebook and Snap, AppLovin had something that they didn't: control over both content and the ads. The revenue in 2020 was $1.45 billion with a net loss of $125 million because they were still burning cash due to aggressive expansion, but it recorded over 400 million daily active users. Now coming to stage 2, building AI muscle with Axon. You know how in superhero movies there is always a scene where the hero stumbles onto some secret power that changes everything. For AppLovin, that moment was Axon. But what exactly is Axon? Launched in mid-2021, Axon is AppLovin's proprietary AI-based ad engine. It's like the brain that powers the entire advertising ecosystem. Think of Axon as a matchmaking genius that does this billions of times per day. Matches the right ad to the right user inside the right app at the perfect time. It analyzes hundreds and thousands of variables like device type, time of day, previous interactions, app category, even likely user lifetime value. It uses that to predict how likely someone is to click or install and bids accordingly in microseconds. It is not just algorithmic advertising. It is a full-scale machine learning optimization process similar to what you would see at Google or Meta. Before Axon, AppLovin's growth was impressive but not high margin. Once Axon went live, advertisers got better performance, app developers saw higher monetization, and AppLovin took a larger cut and saw fewer inefficiencies. Result: explosive operating leverage. But the real jaw dropper, free cash flow in 2023 reached $764 million. Now that's basically cash in the bank, not just accounting profit. They weren't just growing, they were printing money. Axon changed the business model. Before Axon, AppLovin's success depended on volume, more apps, more impressions, more installs. After Axon, it became about getting more profit per ad shown. Let's look at the stock market story. Stock in early 2023 was hovering around $10 to $12. By mid-2024, it was over $80. Now that's a 500% increase in just 18 months. Now coming to stage 3, why it matters to you and to the broader Adtech world. You might never hear the name AppLovin, but you feel its presence. Ads in your apps are more relevant and less annoying. Free apps stay free because developers now earn real revenue. If you advertise online, Axon enables better targeting, making ad budgets more efficient. For the industry, AppLovin pushes legacy giants like Google, Meta to evolve AI ad offerings and are now competing on tech and not just scale. Their e-commerce ads are now at $100 million run rate in Q4 2024 and are scaling fast, and analysts expect this to hit to $5 billion by 2027. For investors, at 32x PE, it's pricier than Meta by 25x, then Google by 20x, but justified by 80% plus margins at double-digit growth. This basically includes regulatory scrutiny and the need to sustain Axon performance across new verticals. And in the end, let's rewind for a second. AppLovin started out selling backend tools to game developers, basically the plumbing of mobile gaming. No hype, no headlines, just code. They spent years quietly building from the game SDK to the Maxpediation platform and the Axon, their machine learning engine that is now powering ads across thousands of apps. When growth stalled, they pivoted. They stopped trying to be the next mobile game studio and instead became the engine behind all the games. And now their ad business is moving. They've offloaded gaming by boosting margins. They're printing free cash flow. The stock is up nearly 500% in 2 years. AppLovin isn't just another tech stock. It's a case study on how to reinvent the company from the inside out. So next time you're playing a mobile game, an ad pops up that makes you wonder, damn, that's too relevant. Remember, you might be witnessing one of the most profitable pivots in the Silicon Valley history. And AppLovin, they're just getting started. But you know, as investors, what is the most important thing is to find the real opportunity and being early enough to ride that shift before the headlines catch up. And appreciate we make that possible. We bring global markets within reach with no minimum investment, no complex paperwork, and no hidden fees. Just real access to real companies which are building the future. Start with 1 rupee, invest in fractions, own the kind of innovation that doesn't just grow, it compounds. And with our curated research and market analysis, you're not just investing, you're staying ahead of the curve. The future isn't waiting, and neither should you. So download Appreciate today to invest in global stocks. And subscribe to Appreciate for watching more such insightful case studies of more such companies.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.